Good evening. We're going to start the Finance and Governance Committee for March 12 to order. And roll call and posting of the agenda.
Member Tehran,
Here.
Chair Zaragoza,
Here.
we have a quorum for this meeting. The agenda for this meeting was posted on the City Hall Bulletin Board on March 5th, 2024.
Okay, so please join me to salute our flag. I pledge allegiance to the flag of the United States of America and to the republic for which it stands, one nation, under God, indivisible, with liberty and justice for all. Thank you. Okay. Madam Clerk, do we have any speakers for items not on the agenda?
Chair Zaragoza, there's no public speakers virtually or in person for this item.
Okay, thank you. Then we're going to item C, and this is consent item, and this is City Clerk Department, approval of the minutes. Recommendation that the Finance and Governance Committee approve the minutes of Feb 13, 2024 regular meeting as presented. And do you have an opportunity to look at the?
I did. I move to accept the minutes as presented.
Okay, and I'll second, and we'll vote.
Thank you. Motion carries 2-0.
Thank you. Our next item, this is a reports, Finance Department, subject fiscal year 22-23 annual comprehensive financial report and summary presentation. Recommendation that the Finance and Governance Committee receive and recommend staff proceed to the full City Council with the fiscal year 22-23 annual comprehensive financial report, ACFR, and the summary presentation from the city's internal financial auditor, Eddie and Payne. And my understanding that we have a presentation that's going to be live. And Javier, you want to go ahead and introduce our speakers?
Excuse me. Good afternoon. Javier Chagoyen, Chief Financial Officer, City of Oxnard. We have our external auditors online to make a presentation, and we also have here in-house Beth Bo and Cesar Perfecto that will be able to address any questions. And before giving the opportunity to the auditors to explain the overall audit for the fiscal year 22-23, I want to thank all the finance staff for all the work that they put into this audit, and all the city departments that are helping in many different ways to provide
Put
the
it together,
information
yes.
that the auditors need to perform this annual audit.
Okay, thank you. So is then our Eddie and Payne ready?
Yes, I'm ready.
Go ahead. Welcome.
Do we have the slides up there?
Okay, there we go.
All right. Good evening, Mayor Zaragoza and other members of the Finance and Governance Committee. Ladies and gentlemen, or are there? It's my pleasure to present to you tonight our audit report for the fiscal year ended June 30, 2023. So, can you hear me well?
Yes, we can hear you. Yes.
Okay, so let's move on to the next slide, please. So the next slide will show you the agenda for tonight's presentation. I will talk about the auditor's opinion that we issued on this report, significant audit matters that we are required to present to you. Also some highlights on the annual comprehensive financial report, or ACFR, and then some discussion on revenues, expenditures, and budget versus actual of the general fund. So moving on to the next slide, please. Before I continue, actually, I wanted to say that if you have any questions, just let me know, and we can stop at certain points of the presentation. It's not going to be a very long presentation, but there are a lot of things to cover. So if you have any questions in between,
And let me share something with you right now. I think this is probably the best of the whole report, just clean opinion. Thank you so much. Go ahead.
Yes, correct. I congratulate the city again for having a clean opinion for June 30, 2023 year. And the entire opinion report is on pages 1 to 4 of the ACFR. Let me tell you that what this means. The financial statements that are presented to you today in that 200-page ACFR is fairly presented in accordance with the generally accepted accounting principles promulgated for government agencies. So I'm assuming you have a copy of the ACFR?
Yes, we do.
Okay, so this 200-plus page book is a product of city management's efforts to provide the city council and its constituents with a complete and accurate picture of the city's financial position and changes in financial position and cash flows for fiscal year 2022 to 2023. These financial statements are the responsibility of the city's management. Our responsibility as auditors is to audit them and provide the audit opinion. So what is EDN Payne's here is just the pages 1 to 4 of the ACFR. We believe that our audit provided sufficient and appropriate evidence to provide the basis for our audit opinion. So the clean opinion is what you would like to get all the time. And I love giving them out.
Thank you.
Now, the process of getting there, though, was a little challenging this year because the city changed its ERP system that they started, I think, back in August of 2022 or July of 2022. And the full fiscal year was based on information that was kept in a new ERP system. This change posed some difficulties during the audit and particularly in the preparation of the financial statements. But we are not complaining really because it also provided good opportunities to the city. Let me just remind the committee that EDN Payne actually recommended that the city convert its previously obsolete accounting system to something more updated. That was back in 2016, I believe. So 6 years later, the new ERP was finally implemented, and then we applaud the city for doing so.
Good.
Go ahead.
I mean, good. That's good that we're updated now, as opposed to the obsolete procedures that we had in the past, which is really, really good. Thank you for that.
Correct. Yes. Thank you. Among other things, the new ERP system allowed the city to streamline its funds and chart of accounts. So while a lot of funds were changed, some of them were old funds that were related to each other, got merged. Some funds were split up. Some funds were no longer being used, and so they were closed, and new funds were created. A new chart of accounts was also created. The finance department, and I really applaud them for doing this, took this opportunity to align or realign financial reporting with operational activities. They also allocated or reallocated costs with appropriate revenue sources. And overall, there was a big improvement in the usefulness of the financial statements, not just for the audit, but also for day-to-day operations of the city. The city took full advantage of this opportunity in order to give you a more relevant financial report, and it paints a clearer picture of the city's financial position and changes in net position. So all of that's well and good, but when we were doing the audit, it was a little difficult. On our end, we had to remap all the new accounts to our audit software and the city's financial statements as well. That took a lot of time. The city also spent time to reclassify the prior year accounts to align to the current year classifications. That's the only way that 2 years can be compared in your management's discussion and analysis. So we took a lot of time to do that, and that's why we're coming to you now in March instead of in January when we usually do that. That has caused a delay in the issuance of the audit report, but in the end, I believe the city came up with a more useful report and one that reflects the functional revenues and expenses that more closely aligns with the city's operations. So kudos to the finance department and to the entire city for doing this.
Thank you for that. I think
So-
it's really important, I know you're gonna go through the report, but I just also want to thank, the finance department, the city managers, and all the departments for the cooperation. I know you have not finished, but that's a tremendous amount of work here. But thank you for saying that.
Yes, so let's move on to the next page. So before I discuss some details in the ACFR highlights, I'd like to report to you some audit matters that we consider to be significant and that are required to be disclosed to you. So significant accounting policies are one of the things that we have to let you know. There was another change in government accounting principles in the fiscal year 2023. All governments are now required to report the liabilities for subscription-based information technology arrangements, or what we call SIBVITA. You can add this to your growing number of acronyms you will be hearing from us. With the implementation of this new statement, GASB 96, the city recorded liabilities of over $2 million and a similar amount of intangible assets included in the line item.
We have a
called capital
question here.
assets.
Question? Go ahead.
Go ahead.
Councilman Sharon?
Yes, thank you, Eden. Just to clarify, for subscription-based information technology arrangements, is this like our Google Enterprise, Microsoft 360, larger information-based, systems that we use to do the city's operations?
Correct. So all of the IT software really that you use on a day-to-day basis that are subscription-based. I know some of them are purchased, so those are not included in here. These are only the ones that where you have access to, license to use, but you don't really own it.
Yeah, it's for a period of time, I'd imagine, where you renew every other year, every year, whatever the subscription term would be, correct?
Correct. So
Thank you.
what the GASB wanted to do is to recognize that you have an asset that you have a right to use, and then you have a liability for that.
You have to account that under GASB then, yeah. Thank you.
So just want to mention in fiscal year 2022, there was also another new pronouncement, GASB 87, regarding leases, which was pretty similar. It required that the recording of receivables and liabilities, depending on whether you are a lessor or a lessee on a lease agreement side. I think last year the city recorded receivables of less than $1 million. So these are really not big amounts. These are compared to, the amounts that you had to record when you recorded pension and OPEB liabilities. This is pretty small, but it's still a significant effort for the city to gather all of these contracts and evaluate them and make sure that they are recorded properly. Significant accounting estimates, you all know, and I mention this every year, the preparation of the city's ACFR requires management to make estimates and assumptions that affect the reported amounts. So it's important to know because actual results could differ from those estimates. And I listed 4 items that are significantly affected by estimates here. There may be more in your financial statements. Did you have a question?
No, we're okay, so you're not sure the significant items with this. Go ahead.
Okay, moving on to the next slide, please. Significant disclosures. I listed several items here that may be helpful in understanding some of the more significant balances in your financial statements. Cash and investments, that's the biggest asset of the city other than your capital assets. So it's important to know what is included in that amount. It's in note 2A of the note disclosures. Long-term debt along with pension and OPEB liabilities are the biggest liabilities. So that could be something that you will want to look at as well. Deficit fund balances, there's less and less deficit balances in your funds now. I congratulate you again on that. All of the deficits are internal service funds. And it is not unusual to have deficits in the ISF. Those are going to be recovered when the city, if and when the city adjusts charges in future years.
Okay.
Go ahead.
No, we're agreeing with you.
Okay. Okay. And then there's prior period adjustments that are recorded in fiscal year 2023. That doesn't happen every year, so maybe you need to know what that was. We will talk a little about this in the next slide. And then commitments and contingencies, risks and uncertainties. Those are also important to know. These are mainly items that are not really included in your financial statements. I mean, the amounts are not included. For example, there's commitments for construction commitments. They are not really included in the financial statements per se. Encumbrances, lawsuits and claims that are pending that may result in a loss. Disallowed claims for grants that have not happened, but there could be some of those that could happen in the future. So those are just things that you know, your management wants you to be aware of. And then next slide, please. Audit adjustments. I noted in this slide 5 adjustments that were proposed by auditors to correct certain items that were found in the city's books. The city has posted and corrected all of these items. So first thing is that we proposed an adjustment of a little less than $1 million to accrue interest and adjust the fair value of the Ventura County investment pool. As you know, the city invests in, has money in the pool for Ventura County. It actually increased this year by 30 million. So the accrued interest and also adjustment on the fair value went higher by almost $1 million. So that has to be posted. Then we proposed to record intangible assets or software that are related to subscriptions in the internal service funds. That's about $1 million. This is related to Gas B96. And then we had a prior period adjustment for pension and OPEB. And I wanted to detail this a little bit more. We proposed to revise the methodology of allocating pension and OPEB liabilities to the governmental funds or governmental activities and business type activities. This is to provide you with, or provide the city a more proportionate distribution of the liabilities based on staffing distribution. So the prior period adjustment increased liabilities in the business type activities, so water, wastewater, environmental resources. Those went up as far as liabilities go. And then in the governmental activities, the liabilities went down.
So those adjustments had to be done for the utilities, is that correct?
Correct. That was done to have like a more equitable distribution
Right.
based on staffing.
And for the prior period, was that last adjustment that we did, is that correct?
Yeah, so this is a prior period adjustment. Anytime you have to have an adjustment like this,
Okay.
it has to be calculated from the beginning of the year. So that's what we call a prior period adjustment. So
Okay.
anything that was affecting the prior years is just included as a 1-year adjustment at the beginning of fiscal year 2023.
Okay, thank you.
And then because of that adjustment in the methodology, there was also a change in the current year entries for OPEB and pension, a net decrease of $5.5 million. And then a second prior period adjustment was made to record deferred revenue related to pilot loans that were originated in prior year. This was just an oversight on the part of the city as well as the auditors. We did not catch this in fiscal year 2021. And so when we caught it, we suggested a prior period adjustment.
So staff has corrected all this adjustments, audit adjustments.
You're right. Everything was corrected.
Thank you. Okay.
So final slide on the significant audit matters. Please move to the next slide. So in the letter, and I think you have this letter to the city council, we noted several items that we considered significant risks at the onset of our audit. All of those risks were addressed and resolved during the audit. So what happens is before we start any audit, we have to identify risks, and that is based on audit, standards that we audit based on risk. We consider all types of risks that we think may be possible, like fraud, maybe misstatements of revenue or misstatements of payables, things like that. We identify those, and then we address them as we do the audit. So all of them were addressed and resolved during the audit.
And those are potential, when they say the word fraud, it stands out, but those are potential significant.
Those are potential.
Yes. Oh,
Yeah.
that's important.
As auditors, Mayor Zaragoza, we always look for fraud.
Right.
So
right.
in the past, there's not a lot of focus on that, but audit standards have changed in the past maybe 5 to 10 years to provide more focus on looking for fraud, because it happens, and we don't know when it's going to happen.
And also one of the things, that you talked about, the antiquated accounting now with the ERP implementation, potentially we're now looking at cleaning up a lot of the items that we had in the past. Is that correct? I think ERP is really worked out.
That is correct.
Okay, thank you.
Yes. Thank you. So do you have any other questions on that?
Any other questions? No, go ahead.
Okay. So I did mention already challenges that we encountered during the audit for the ERP implementation. I don't have to belabor the fact. I wanted to say, though, that we didn't have any disagreements with management in the conduct of our audit. Always been a pleasure to work with your finance department, with your city management, actually all the departments that we work with, you know, HR, Public Works, all of them. They're very cooperative. They provided us access to personnel that we requested to interview. They also provided all documents that we requested. So thank you for making it easy for us to do the audit.
Thank you so much. So I think the important thing that I want to kind of reiterate again is Eddie and Payne LLP Certified Public Accounts has issued an unmodified clean opinion of the city finances statements for fiscal year ending June 30, 23. The independent auditor report is located on page 1 of this report, which I think is excellent. So I'd like to commend our staff, our city manager, our finance folks, and all the departments for working on this item. This is a nice, clean report, and there's a lot of items that we're working with, and staff is working with Eddie and Payne, which I think is extremely important, you know. Council members, any
No questions on this. Only thing is, did we have ACFR highlights as well, or are we at the end of the presentation?
So we can proceed to the ACFR highlights if you didn't have any more questions on
No, let's go ahead.
the significant audit matters.
Let's go with the,
Thank you.
We got our donuts here.
okay.
So
like donuts.
this is the donuts, yes. Very colorful donut. This presents the net position of the city. Okay, so and the classification of those net position. So as you can see, the proportion of assets and deferred outflows to the liabilities and deferred inflows, and also the net position is very consistent from year to year. You know, the 2022 and the 2023 graphs look really identical. That is to be expected. If it varies a lot, it might be something wrong. So the statement of net position is your government-wide balance sheet. It presents the entirety of the city's resources, both financial as well as capital. And the net position tells you the long-term outlook of the city. So that's why I'm saying this should be pretty consistent from year to year. Very little change. You know, over maybe 10 years, there will be more changes, but this one is normally pretty consistent. The statement of net position is divided into governmental activities and business type activities. Governmental activities include all activities supported by taxes and intergovernmental revenues. And then business type activities are those activities that are supported by user fees and charges. So your business type activities are your water, your wastewater, environmental resources, golf course, and your Oxnard Housing Authority. Not in this slide, sorry, I didn't prepare one, but something you may need to know, to be aware, is that the city's net position of $2.3 billion, actually, so this entirety of your net position in the green part of the donut, that is composed mainly of $2.2 billion, or about 95 to 96% of net investment in capital assets. So capital assets are used to provide services to the city and are not available for spending. Net investment in capital assets reported net of related debt that used to acquire the capital assets. But to repay the debt, the city has to look to other sources because the capital assets themselves cannot be used to liquidate the related liabilities. So that net position right there, that is $2.3 million, is mainly in capital assets. What remains after you take the net investment in capital assets is approximately $138 million. And that is actually all of that is restricted for debt service, grants, infrastructure, and other things. There's actually a deficit in the unrestricted part of your net position by around $40 million. So that deficit is mainly due to obligations that are meant to be liquidated with revenues that will be received in future years. So for example, those obligations include pension, OPEB, claims payable. They are not to be paid next year. So, you will be generating future revenues to be able to pay down those obligations. So next slide, please. This shows the revenues this is government-wide. This includes both governmental activities and business type activities. So as you can see, the blue bars, those are the 2023 revenues. So the blue bars that are higher, most of them actually are, except for the capital grants and contributions. So it's a good thing, I think, to see it, like this, like you can actually see your revenues have gone up from 2022. Charges for services is the first stack here, the first two stacks, blue and green. Blue is 2023, green is 2022. It appears that it has increased by approximately 7 million. So this increase is mainly due to a remapping of accounts. So really, this should have been pretty consistent from year to year, except the accounts that were used in last year, or in last year's financial statements, are not the same as what we use this year. So it looks like it increased by about 7 million. But if you remove some of those inconsistencies, you're probably going to look at around 2 million difference. Operating grants and contributions, there was a combined, actually there's an increase in operating grants and contributions, but a decrease in capital grants and contributions. So when you combine those two, there's a decrease of approximately $3 million. This is primarily due to a decrease in governmental activities from $55 million last year to $46 million this year. Part of that is the ARPA fund that was received last year. So this year there wasn't as much. In 2022, you received a big amount in the ARPA funds last year. And then also there was a decrease in Oxnard Housing Authority grants. Taxes, that's the biggest thing. It increased by 12 million. So you can see here the fourth stack of blue and green bars there. There's an increase of $12 million. That's mainly due to increases in sales tax, primarily attributable to the opening of an Amazon fulfillment center within the city. 2023 is their first full year of operation, and also there was a one-time payment from prior year. Property tax also increased by about 4 million, I think. So we'll discuss more about taxes on page 13 of the slides. You have any questions on this?
Any questions? No? No? Go ahead.
So moving on to expenses. Again, this is including, next slide, please. This is including both governmental activities and business type activities. The first half of this is governmental, and the bars that's starting with water, those are all business type. So blue bars again are 2023, and 2022 is green. So you can see the blue bars that are higher in the general government and public safety. Those are the biggest ones, and also environmental resources. So that means expenses in 2023 is much higher than 2022. In the general government, actually, that's 73% of last year's expenses. In public safety, that's about 10%. The main drivers for the increases in expenses are, number one, an increase in the net pension liability. Number two, there's an increase in liability for compensated absences. And also there's investment in information technology. Those are the ones for the differences in the general government. For public safety, the increase is mainly driven by increases in wages and benefits. Public safety was able to fill vacant positions. There's also increases in level of service. For example, there was an increase in station coverage, and also increase in usage of vehicles and equipment because of more personnel being used, and then investment also in information technology. So those are the main drivers for those increases in the governmental activities. Housing, I think there's also an increase in by 3 million. That is mainly due to increase in spending on existing as well as new programs. And then environmental resources is the other one that increased by 3 million. Mainly increases in labor expenses like salaries and wages and other benefits. Oxnard Housing Authority also increased. That's mainly an increase in housing assistance payments as well as general and administrative expenses. Now, some of the blue bars are lower than green bars. So 2023 went down for community development. That decreased by 3 million, mainly due to this was due to remapping of some accounts that are previously mapped to community development. They are now being mapped into housing and public works. So you can see housing went up mainly because of that. Water also decreased by 3 million, right? Yes, it did decrease
Right.
about 3 million. I can't remember what that was, sorry. Maybe Beth
Go
can help me out on that one, because I don't remember that.
We got a question here. Go ahead. Go ahead, Javier, then
Yeah, in fiscal year 2022-23, it seems so far away, and with all the rain that we have had, it's almost hard to remember that we were in a drought and there were certain restrictions on the amount of water. So the cost of purchased water was lower because there was all the restrictions.
Because of the rain, people were not using as much water then? Okay,
So we were purchasing less water.
okay. Go ahead.
Because of the drought and the regulations that came from Metropolitan where we had once a day watering.
Right, okay, good. So that caused the reduction then?
And that's reflected in the lower cost for fiscal year 22-23.
Okay. Councilmember, does that answer your question? Okay, thank you.
Thank you, Javier and Sherry. I kind of blacked out on that one for a minute. So, okay. Any other questions?
In the
on
environmental
revenues?
resources, I'm sorry, that's why we're having the study now, and I think it's important that we correct that. Go ahead. Councilmember.
Yes, thank you, Eden. Looking at the different areas here, the different categories, when we have expenses compared between the two fiscal years, 22 and 23, would it be safe to say that majority of any increases in expenses tend to be on labor and materials? I would imagine specifically for public works, but probably for many of our other our funds as well. Does that sound about right?
That sounds about right. So mainly the drivers are labor, costs, which includes not just salaries and wages, but your accrued vacation, your pension expenses or pension costs, the usage of facilities and equipment. So all of that is factored into drives the cost to go higher. Information technology is the other one that is costing a lot more
That's right.
money this year, and it's not something that you can postpone. That is something that you need to upgrade all the time and be able to use that, because if you don't use it, then you're just behind the 8 ball.
Yes, thank you for that. And along those lines, I think we have a slide about revenues versus expenses coming up. I only ask that just so that it's clear kind of what we're looking at when there's an increase in expenses, that grocery stores are going to have an increase in expenses for the cost of purchasing their materials that they sell, but also their cost of their labor of employing people to do all that work, and their vacation and their benefits. And so this is not unique to the city or the public sector, but rising costs all across the board. And the last thing I'll say about that is I think it's important for the public to remember that when we have the ability to enhance programming, oftentimes that means we need people to carry out that programming or those operations. And so if we increase our public safety efforts, that doesn't just magically appear. We actually have more people who we hire to enhance those services. And for recreation, when we offer more programs, we need staff to carry out those programs and oversee them. And so I just hope that that's clear, that it's not that everybody is, just getting by on, government paycheck over here and living up the life, but these are costs that across multiple sectors, but are expected costs as well when it comes to labor. So thank you.
I noticed that Public Works is 5959. That's almost any of it's that because they do really good work. That's excellent right there.
Actually, but some of these categories are a little bit skewed because last year we were using different accounts and different groupings of accounts. So there could be some I would say, I wouldn't say that a lot of skewing here, but it could be a little higher, it could be a little lower. But that is a little consistent from year to year, which is I
good.
think because of the programming that they have is pretty consistent.
Right, and also, as was said, the cost of fuel has gone up tremendously, and the cost of repairs and maintenance, and, yeah, but that's a good graph, thank you.
Okay, so moving on to the next slide here. So this focuses just on the business type activities. The blue bar now is the program revenue, and the red bar is expenses. So you can see in water, the blue bar is lower. That means they had a loss. Also in environmental resources, they had a loss. And also in Oxnard Authority, they had a loss. So this is only program revenue and program expenses. There are...
Eden, question here by the council member. Oh, go ahead.
When she's done with this slide.
Okay, go ahead. I'm sorry, go ahead and continue.
Oh, okay. So for water, I think we already already mentioned there that water revenues were limited in 2023 because of the water restrictions due to the drought. But that really just exaggerated the inherent problem in the water system, where the rate structure is, I don't think, is consistent or in line with the cost of operating the system. So hopefully, I think you're working on new rates for 2024, or that's already approved.
You're right.
So that may resolve that issue.
Right. And one of the things, Eden, that you're probably going to share, that we've had a lot of concerns about the golf course, but it looks like they were up by $1 million or so, which I think it's important for people to understand that.
Yes, I wanted to say that you know that people get concerned over the golf course, but it looks pretty good as far as their financials. They actually had a net margin of approximately 17%. So that seems like a good business over there.
Right.
The environmental resources, this one in the middle, almost the same as the water, really, but the rates for environmental resources probably have not been adjusted for many years.
10 years.
And we have seen this deficit several years now. So that
that's important that we take.
I think you have proposed new rates for this, right?
And that's important that we take care of the environmental resources. And like you said, we have not had an increase for about 10 years, which is it's important that we continue working on that. Yeah.
Okay. On the wastewater, this looks like a good one because you had better revenues than expenses. That is part of the new rates that were being charged on wastewater. These surplus is going to be used or earmarked towards capital projects and payment of outstanding debt. So it's not like it's available to be rebated to the people who pay for it.
Eden, go ahead. We have a question here by Councilman Turan.
Okay.
Go ahead.
Yes, thank you. I think you've already touched on them well enough, but just to point out that our enterprise funds here, when we have golf course, environmental resources, wastewater, water, last year we did do the rate study and the adoption of change to our water rates. And this particular graph for that fiscal year doesn't fully reflect those new water rates, as I understand it, which started
Correct.
July 1. And so it's my hope as a council member going into next year that we'll realize closer or more matched revenues and expenditures or expenses for that particular enterprise fund. And we're in that process right now with environmental resources, which you are correct, for the last couple of years has had its expenses outpace its revenues. And we need to correct that in order to keep it sustainable. So just wanted to thank you for mentioning that so that it's, there for the public, that people know what this graph is representing.
And let me share a little bit more too on that water, wastewater, and environmental resources. Those are health and safety issues. Those are works and work that we have to do for the public to keep the public healthy and safety, because water is needed, every single wastewater and environmental resources are vital health and safety programs, and the self-supporting enterprises too, which I think is really important that the public understand that. So thank you for that. Councilman Basu, no, go ahead and continue then, Eden.
Okay. All right. Thank you for those comments. Moving on to governmental funds now. So,
Oh, hold on, one more question here from the council member.
okay.
Thank you, Eden. Just a quick clarification on this particular slide for the golf course fund. For this particular year, we have expenditures at 5.7 million, correct? And
Yes.
on the previous slide, if we can go back one slide, this one for 2023 in the blue, it listed at 6 million. Was there a typo or rounding or?
All right.
No, it's just rounding. I used like a decimal point here versus there's no decimal point, so it becomes 6.
I'm sorry, my apologies.
So it equals
It's
out.
40,
That's okay.
50 million, actually. I was looking at the wrong one.
All right.
I see.
Oh.
So
Yeah.
the slide I have is different from the slide we're showing right now. That's what it was. On mine, golf courses and ER were switched.
Oh, yes. Okay.
So
yeah, we did.
what the
we did
public is
make
seeing
that
is correct. What I'm seeing on my computer is incorrect.
So you need a new computer.
Correct.
Look,
I need a new computer. Yes, that's what it is. I'm confusing everyone.
Correct.
I should have just kept myself confused. That's what it is.
Thank you.
My apologies on that. Mystery is solved over here.
No problem. No problem.
Thank you.
Yeah, the original copy that you got probably had the wrong one. Okay.
Thank you, Councilmember.
So moving on to page 11,
Yes.
we're going to talk about governmental funds,
Okay.
fund balance. So this is including your general fund, your state and federal grants, all your non-major funds, your housing successor fund, debt service fund, all of the governmental funds are in here. The total fund balance in 2023 is 206 million, and the total in 2022 was 189 million. So that is an increase of whopping 17 million. Yay. That's 9% of the prior year fund balance, which is great, right? So you can see the positive change here came mainly from 3 sources. And I'll discuss this a little bit more later. The 3 sources of the increase in fund balance is mainly in sales tax, property tax, and miscellaneous revenues. Miscellaneous revenues included, well, I'll talk about that a little bit later. So what I'd like to show you here, though, is the classification of fund balance. So you can see there's like 1, 2, 3, 4, 5, 4 pieces of the pie. The restricted amounts are the orange one. So restricted, that means that it is restricted by outside parties, such as grantors or debtors or state and federal laws and regulations. So that is not something that is in the control of the city management or even the city council, because that is already restricted for certain purposes. That is approximately 55% of the governmental fund balance. 22% here is committed. That's here in the green. That's committed to Measure O related projects and other multi-year capital projects. So this commitment is set by the highest level of governance within the city, which is the city council. So that's part of your appropriations. The assigned fund balance is 14%, but you can, if you look at last year, there's no assigned fund balance. This year, the city management had made it a point to assign 14% of its fund balance to operating reserves. So that was possible because of the increase in the fund balance. If there was no increase, you probably wouldn't be able to have that assigned 14%. And you still have unassigned fund balance of 9%. That's remaining in unassigned. So unassigned is whatever it is that is not restricted, committed, or assigned. So it's a good thing that you have this increase, then you can actually have that reserve of, that you actually have a policy to do.
Which is really good, because we didn't have that before. I mean, it's increasing, which I think it's money in the bank in case. Very good.
Yes. Yeah, so actually, I think this is the first year since the city adopted the reserve policy that the assignment was possible. So good thing. Let's move on to the next slide on the general fund group. So we're focusing now on the general fund group that actually includes Fund 101 and 104 and other smaller funds. During the year, revenues exceeded expenditures and other financing sources and uses by $34 million. So you can see 2023 blue, 2023 revenues is in blue, and 2003 expenditures in blue. Green, sorry. That increase was the revenues exceeding expenditures by $34 million. Last year it was $38 million. So from last year to this year, there was a decrease of $4 million in excess of revenues and expenditures. So let's take a look at revenues first on the next slide. So you can see here, 2023, you had $241 million in revenues. 2022, you had $221 million in revenues. That's an increase of 20 million. I can still count. Almost all categories of revenues increased here, except for charges for services. But, property taxes increased by $4 to $5 million there. Sales tax increased by 11 million. And then other taxes also increased by 1 million. So property taxes, obviously, it's because of general increase in property values within the city. Sales taxes also reflects the continued growth in the local economy. And also, the Amazon Fulfillment Center was a big change this year. Other taxes also increased approximately 1 million. Charges for services in the general fund decreased by 4 million here. A big portion of this decrease is due to remapping of some items from charges to services to licenses and permits. So in the past, we called them licenses and permits. This year, they're into, sorry, in the past, it was called charges for services. Now we move them into licenses and permits, which is included in all other categories.
Just an
Investment income and miscellaneous income also contributed to the increase here in all other categories. Investment income actually is including interest income, as well as changes in fair value of investments. So there was a big increase on that in current year. Next slide, please. Now, general fund expenditures, you can see it also increased by $20 million from 171 to 191 million. So almost all categories actually increased. General government increased by 4 million, public safety increased by 9 million, and all others were 7 million in total. So the increases in general fund expenditures, we already talked a little bit about this earlier. They're attributed mainly to a rise in salaries and benefits, as well as investment and information technology. It seems to be true across all the funds. So the revenues and expenditures increased about the same amount. However, there were transfers between from the general fund to other funds during the year by around 4 million as well. And all of those transfers are approved transfers to other funds. So moving on to the next slide, budget to actual. For our final slide, I kept the best for last. I'd like to show you graphically the comparison between budget and actual revenues and expenditures. So to the left is revenues, and to the right is expenditures. Actual tax revenues exceeded fiscal year 2023 by 17 million. So here, that's property tax, sales tax, and other taxes combined, $17 million over your budget. So this is consistent with my explanation about tax revenue as well. Those were unanticipated, I guess. So they are were not adjusted. Most of the categories of expenditures fell within the budgeted amounts, and except for public safety. So the blue bar in public safety is the actual is exceeding the budget of the orange one. So that's the only one that actually exceeded budget. To explain that, I think this is because the budget included vacancy savings, which of course did not occur because the vacancies were filled. So that was the disconnect there. So before I end my presentation, I'd like to ask if you have any last minute questions. And also before I end, I will summarize. So,
Quick question to staff or maybe to Javier. Because of the current litigation that we have for our streets, that we're using general fund money, what effect is that going to have on our general fund? I think it's account number 101, 101.
That's a very good observation. Right now, we are funding those street projects with a combination of general fund and Measure O funding.
So if we, I think I'm looking at a number of, we're going to spend X amount of dollars, so 16 million, I can't remember what it is, but for next year, we're only going to have 6 million. Is that correct? I think maybe Michael can explain that to us, because I know we're going to be using general fund monies that could be used for police, fire, and so forth to fix our streets because of the litigation.
Good evening, Mayor and committee members. Michael Wolf, Director of Public Works. So I think part of the question is about our funding of capital projects this fiscal year versus next fiscal year. What's being displayed, I think, is the previous fiscal year. So
I understand that, but what effect is it going to have?
This current fiscal year, we are using as Javier mentioned, general fund and Measure O for I think it was like $16.4 million of that is what was budgeted this fiscal year, on top of what we get for streets, which would be for like gas tax. So collectively, we had closer to $20 million this fiscal year to spend on street paving with those combinations of those monies. Next fiscal year, we know that we will get gas tax. And then we also have a identification of Measure O for alleys next fiscal year. That still needs to be approved, obviously, through the process. Those combinations of dollars is about $6.5 million that we know that we'll have available to do paving. But as you mentioned, Mr. Mayor, in order to keep our PCI, we're looking at needing about $23 million for that.
23 million. I know we're just talking about past fiscal years, but we're going to have an impact as the time comes. Go ahead.
Yeah, thank you for that question, Mayor, and thank you, Mr. Wolf, for the response on that. I think it is important to recognize that when we are looking at this report next year, how does the pushing of the city to cash fund capital projects like street paving affect our revenue and our expenditures for the general fund and for Measure O, as Javier had mentioned. And the mayor said it briefly that we, in order to live within our means, in order to do those things, we have to prioritize which streets and which alleys are going to be able to get paved in the amount that we're going to budget for that. And that also means what else are we not going to be able to do from the general fund in order to fund that. And the way I think about it is, if you were to mortgage your house and you plan to pay X amount per month for 30 years, and then somebody says, well, no, you got to cash fund your house now, and good luck. And how would you do that? What monies do you not eat? Do you not have health insurance? Do you not have a car? I mean, how do you figure that one out in your personal budget? And so if you hear folks saying, oh, well, the city likes to put the roads and these big expenditures on the credit card, what's a way too simplistic way to look at that? Because our own personal capital, large expenses, you don't put a car or a house on a credit card. You finance it over a long period of time, much like we were planning to do with the roads and just can't do at this point. Therefore, just like in our personal budgets, the city now has to cash fund these things we otherwise were going to do, which means we have to take money from things the general fund would have supported in order to do the roads that we need to do anyways. And it's unfortunate that the city's been placed in that position, but that's where we are right now, and we're figuring out what we can given the resources we have. So it'll be interesting to see next year's annual comprehensive financial report to see, where we lie with that. And, Mr. Wolf just shared that we're looking at, about $23 million of proposed costs in paving expenses. And I can't imagine, what, if we were to do all of that, where are we going to pull that from? I would love to do all $23 million worth of roads, but we can't do it at the expense of public safety or recreation, unless Oprah shows up or something and just helps us out, right?
A couple of million.
So anyhow, I appreciate all of that, and I hope the general public hears that and understands the position that the city is in trying to prioritize and do everything we need to do given the resources we have and the constraints we have, and especially constraints that have been placed upon us and placed upon the public by individuals. So thank you.
So I just wanted to bring it up because right now we look okay, but let's look for the future, and hopefully we can settle this, that litigation, that's really hampering us a lot with that Star lawsuit. Thank you. And
Thank you, Mayor. I'd like to thank everybody for the presentation. I do have, though, a question in regards to a comment, and please correct me if I'm wrong, Eden. She mentioned that one of the reasons for the over budget was because we budgeted for staff that we thought we weren't going to hire, and then we hired them. Public safety?
Councilmember, I believe that it was overtime that accounted for the public safety going over, and that's because we do have vacancies that need to be backfilled by people who are then working, time and a half.
Okay. So it wasn't because we hired people that we thought we weren't going to hire.
It's a combination of the two things. We were able to hire some, but then still the vacancies need to be covered with overtime that is more expensive.
to make up for the, Okay.
Okay, I just, I would like to see a budget where if we are going to fill the vacancies, that they be included in the budget. I mean, I understand over time we can't, especially in public safety, it's really hard to determine that. That's really understandable. But if we don't plan on hiring that 1 year, maybe we can freeze that position. Or if we might hire, include it in the budget in order for the council to have a broader view of what the budget really is.
Thank you. So Eden, in summary, you have a summary in,
Yes. So thank you for all your comments. And, I certainly hope that some of these comments that I made, presentations that I have here have helped a little bit in, understanding the financial statements that you have been provided. Now, with your new ERP system, I think you can have, better reports and things like that more timely. That is not going to wait till 9 months later before we, issue the financial statements. This financial statements is the first financial report that was prepared from Tyler ERP system. And it reflects a more streamlined fund structure, chart of accounts. And I hope that, this can be used more frequently, not just once a year. So I acknowledge the efforts of your finance department in putting together all the numbers for us to audit. They put a lot of thought into the design of the ERP system and also a lot of time and effort into its implementation. Also, the credit should also be shared with all the other departments that contributed to the success of the ERP system. I wanted to add as well, the most significant change in governmental activities revenue was your sales tax. That is not something that you control, but having that, knowing that your economy, your local economy is growing and all that, helps to provide, revenue sources to the city. As far as the business type activities, the water fund and environmental resources experienced a deficit in current year. Those revenues, I believe, are going to be improved when you have, implemented newer rates. Our audit resulted in some significant adjustments. The most significant adjustment resulted in changes in your beginning net position or prior period adjustment. Those adjustments merely reflected changes in the net position. They had no effect on the governmental funds or the governmental funds, sorry. Lastly, I'd like to encourage everyone, those who are watching, in their homes as well, to read the management's discussion and analysis. The financial statements and all other parts of this book are important too, but if you have only a few minutes to spare, the MD&A will provide you all the highlights. It's shorter than reading the 200 pages. So thank you so much. And if you have any other questions, I'd be happy to.
Thank you. No, Eden, I just want to thank Eden Payne for an excellent job, excellent work. And again, as you mentioned, thank all our staff for all the excellent work. And excuse me, one of the most important things is unmodified, clean opinion. Thank you for that. Council members?
Chair Zaragoza?
Any speakers?
There's no speakers for this item virtually or in person.
Council member? Councilwoman? So we need a motion?
If I
Javier, go
may,
ahead.
I just want to make one last comment. The importance of what we're doing today, this audit, is critical to the overall trust and transparency of the financial information of the city, and this is just one step into that direction. Like we just have mentioned the implementation of the ERP, the implementation of the actual reports that we bring to council for the risk assessment. So this is just one step into that direction. And I also want to mention that there's in the governance communication to the city council, there was an updated version of that letter that has been shared with the city council to highlight something that Eden has mentioned, that all the risks that the external auditors were identified through the audit process have been addressed by the city, and the auditors haven't found any instance that in their review that the city has basically any of those risks are in this moment. So the risks exist, but we have controlled that risk, and we have made the adjustments to reflect that in our financials.
Okay. Thank you, Javier, and thank you, staff, for excellent work, So the recommendation is that we go ahead and accept the receive and file, and also recommend that the staff take this to the full city council for fiscal year 22-23 annual comprehensive financial report. Do we have a motion?
I will move the recommended action.
Motion by Teran, second by Basua. Please vote.
Mayor, I have a motion by Councilmember Teran, and I have a second by Councilmember Basua.
Thank you.
Motion carries 3-0. Thank you.
Thank you, and excellent, again, presentation. Good work to everybody. Thank you so much. And so next item is any items for future agendas?
I just look forward to continued budget discussions at this committee in the coming weeks and months. So I don't know how many people are excited about that, like I am, but I am excited, so thank you.
Thank you, Councilwoman. Okay, so I have none. We're not excited. So we are adjourned. Thank you.
Thank you.